funds, as long as you use the funds for payroll, which includes commissions and tips. If you have wait staff or anybody that makes salary plus incentives, that is also included as part of the payroll, as well as group health premiums. If you offer health insurance for your employees, the premiums on that is also included in this program. And also rent payments. If you rent space for your business, that is also included as part of the forgivable loan. And if you own the property, the principal payment is not included, but the mortgage interest is included in this program, as well as the utility payments included within this within your unit or property that you are renting or own. Who qualifies? As long as you've been in business for this particular program since February 15, 2020, and you have employees, obviously, because of the name of the program, you do qualify for this program. Of course, you have to be considered a small business under 500 employees, as well as you meet the SBA size standard for the industry. For the SBA size standard, they do have, depending on your industry, depending on the company that you work within, the SBA does have a website that you can go to input your industry code, and then also the sales size of your company, the last 3 average sales size of your company, and it would let you know if you qualify as a small business. And if you do, then you can qualify for this program. I apologize, I didn't put the website here for that one, but we can share it with you later on. Any type of entities can qualify for the PPP, as well as the sole proprietors, the independent contractors that do 1099s, and other self-employed individuals. And of course, the owner has to be a U.S. citizen in order to participate in this program. How is the loan determined? Basically, it takes your monthly average of payroll, your monthly payroll average, excluding any amount above 100,000. You add your health premiums as well as your retirement benefits, 401ks, anything that you offer your employees, that can be included, and multiply by 2.5, and that's how they come up with the loan amount of what you can qualify for. Depending on when you started your business, if you've been operating for the entire 2019, they will take the average monthly payroll for 2019 to determine the average for the 2.5 calculation. If you've only been in business for 2020, but before February 15, they will take the average of January and February to come up with the average monthly payroll, again, for the 2.5 times to come up with your loan amount. And if you're seasonal, that's a third criteria. If you're a seasonal business, they will take, I believe, any 12-week average between March 15th and June 30th. And that's how they come up with the monthly average payroll, again, multiplied by 2.5 to get your loan amount. The total SBA limit on that is on a combined basis. So this is not the only thing that they include in the calculation. If you have other SBA loans, they will take that into consideration to consider your SBA limit, and that limit is 10 million overall. The forgiveness part, how is it forgiven? As long as you're using these funds, once again, as the name suggests, for payroll, from the time you close the loan 8 weeks out, that part of the payroll amount is forgiven based on the loan amount that you have. And remember, it was 2.5 times the average. So 8 weeks is roughly 2 months. So you still have that 0.5 of the loan that you can still have it forgiven. And with that, that's where the rent payment comes in, the utilities come in. That can all be included into the remaining 0.5, that 2.5 on the forgiveness of the loan. If once you receive the loan, 8 weeks out, if for whatever reason you had to decrease your work staff, that decrease in work staff from the time you start for the 8 weeks out will be reduced proportionately in terms of your forgiveness. So just use simple math. If you started with 2 employees and you release 1, well, that's 50% of the workforce that you had from the beginning of the loan to the end of the 8 weeks. The loan will be reduced for the forgiveness by 50%. So 50% of the loan will not be forgiven. On top of that, if the salaries have been reduced by more than 25%. Hello. If the salaries of the employees have been reduced by more than 25%, that also is part of the removal from the forgiveness part, proportionately on how much you reduce your employee salary by. Terms of the loan, the PPP, there's no personal guarantees, there's no collateral, there's no bank fees. So basically, you apply, you get the loan. As long as you follow the requirements, it will be forgiven. The loans have no fees, so the bank should not be charging you a fee up front or during or after. No collateral is taken, and personal guarantees are usually, the SBAs usually take personal guarantees for everything, but for this particular program, there are no guarantees necessary for this as well. Any unforgiven portion, like some of the, like what I mentioned before, if you reduce staff or if you reduce salary by more than 25%, any unforgiven portion, you have 2 years to repay. The interest rate is set at 1%. And the first payment on that is not until the 7th month of when you start, when the loan is signed. So if there's any unforgiven portion, your first payment would be the 7th month of when you start the loan, when you sign the loan, I'm sorry. So how do you get started? So once again, the PPP is issued and processed via your bank. Through the SBA guidelines, when this first started, they suggested going through your bank, the bank that you work with. A lot of banks have decided to only process customers only, but there are banks out there that are looking at new customers. You just have to find them, you just gotta make some phone calls. And each bank requires different items. Each bank requires different submissions. The most widely accepted info is what you see here in the prepared, you prepared the following items for the banks. Again, these are just some of the items here. I'm not going to go through all of it, but as you can see here, that these are some of the items that you need to go back, gather for the banks to start your PPP process. So what is this? Oh, am I going too fast here? Oh no, this is the end. So this is the end of the PPP process. We'll have some Q&A after the next program that I'm going to talk about. So the next program is the Economic Injury Disaster Loan. What this program is, this is unlike the PPP. This is a non-forgivable loan. This is loan, basically what I've been telling my clients here is that any expense that your company still has to pay on a normal course of business qualifies under the economic injury disaster loan. So any expenses that you do relating to paying third-party loan payments, if there's any obligations that you have to pay for maybe like equipment, any working capital, anything that keeps your company moving and steady and staying in business would qualify for the economic injury disaster loan. The maximum loan for this program per company is $2 million, and it's $2 million per company. When you apply for the economic injury disaster loan, there is a $10,000 grant that accompanies this submission. This grant, as long as you're using it for a normal course of business, normal expenses, working capital, you do not have to pay this grant back. This is part of the stimulus package. Who qualifies? As long as you're in operation during on or before January 31st, 2020, unlike the PPP, which is February 15th, you do qualify. Obviously, this is a small business program. Again, you meet the size standards. Again, we'll give you the website of how you can determine if your company is considered a small business based on your industry code and your last 3 years of average sales. Again, just like the PPP, under 500 employees, and any company, S Corp, C Corp, LLC, sole proprietor, independent contractors, any company qualifies as well. And of course, you have to be a U.S. citizen for this one as well. In terms of the loan, anything above 200,000 requires a personal guarantee. Anything above 25,000 requires collateral, and they will take any and all collateral that the company has, with or without equity. They're just looking to put a lien on property. Anything above 25,000. Interest rate, you shouldn't be paying more than 3.75%. That is a set guideline. If you're a nonprofit, it's at 2.75%. And there's really no guidelines out there on terms of when you repay it. The SBA wasn't really clear as to who gets what, how they look at it. So in your case, it might be 2-year repayment, 5-year repayment, 10-year repayment, but they do have the option of going 30 years payback for this one here. The first payment, once you close on a loan, on this economic injury disaster loan, the first payment is the 12th month after you close, which means that the first 11 months is no payment for this loan. How do you get started? Unlike a PPP, which is directly through a bank, this is a direct SBA application process. There's no bank involved. You have to do this, either yourself, or you can have your CPA or attorney or any other companies, maybe such as mine, help you prepare and process. And this is the website that you would go to. Again, there's no bank involved, so you will have to do this directly with the SBA. Once you go on here, you would answer a bunch of qualifying questions. You submit it, and you're not done at that point, because it's for you to obtain a loan from the SBA. It's not that simple. Basically, once you go into this website here and you answer some questions, you submit it, it puts you in line. Now you're in line to wait for an SBA lender to contact you for next steps. In the meantime, there are forms to prepare. There are information to gather. So when the SBA lender calls you, you're not starting from scratch, and you can also help move along the process quicker if you have all the information readily available when he or she calls. Any owners above 20% ownership in the company, there will be a credit check. So they do look at past history with if you have SBA loans in the past, if you've been good payer, not good payer, delinquents. They will take a look at that as well. But bad credit is not it's not an automatic decline. That was made clear by the SBA when they originally rolled out this program. Originally, when we talked about the $10,000 advance, the grant, no matter if you're approved or denied, this grant is yours to keep, assuming you use it for business purpose. Some other additional information, the PPP again is for the payroll, payment, rent, utilities, and EIDL is for any expenses outside of the 3 or the 4 items that the PPP pays. Basically, you can't double dip. So if you're applying for both, and you can apply for both, whatever you get for the PPP, if you have it included in the EIDL, that's a mistake, they'll just subtract it out of the EIDL loan, and then you can keep, and then you'll have 2 separate loans paying for different things. For the EIDL currently, the processing is long. It's about 4 to 5 weeks. I wouldn't be surprised if it's a little bit longer now, based strictly because of the amount of applicants that are in the system. So be patient. Once you submit your original qualifying questions, just be patient. Eventually, somebody will call. SBA will call you, and hopefully it's a good outcome once the process is complete.